How does a company scale its finance function from $0 to $100 million in revenue? To find out, I interviewed 2 unicorn CFOs who've taken their finance teams from scrappy startups to multi-billion-dollar powerhouses. Prior to taking Rippling from one outsourced finance person to a robust finance function that raised over $600 million in funding, Adil Syed worked at Goldman Sachs, helped massively scale Snapchat, and invested in companies like Stripe, Twilio, and Zendesk while at Redpoint Ventures. And before helping FloQast scale to over $100 million in ARR, Razzak Jallow worked on finance teams at Apple, Looker, Google, and Adobe, even helping pioneer their now famous transition from a perpetual license to the subscription model we all admire today. In this video, they challenge the backward structure of traditional finance leadership while explaining the 4 phases of how you can not only support, but even create hypergrowth at your company. So strap in, get out a pen and paper, and get ready for 15 minutes of pure CFO level thinking. Welcome to Spendsetters, where you get expert advice from trailblazers in finance, brought to you by Rippling Spend. We'll start with phase 1, which is really about going 0 to 1 with your finance team. If you're starting with a shaky foundation, here's exactly what Adil did to lay the groundwork when he became CFO of Rippling.
Number 1 was like, go figure out, cash inflow, outflow, like how much are we making versus spending each month, put together, the early version of a P&L. The minute you start dealing with an outsourced accountant, the level of context they have on where things should land in a P&L is pretty limited. And it's not really their fault. It's like no one was investing the time to tell this individual, exactly what the GL should look like. And then from there, I think I did kind of follow a lot of what Razzak was mentioning, which is you get a stellar accounting team in place.
Adil and Razzak command that every finance team should lead with strong accounting, because guaranteeing that your numbers are 100% correct is the foundation that we need for every other functional improvement we're about to discuss in this video. Now that that's in place, it's time to really level up your finance team by introducing your first new role, the Embedded Finance Partner. Phase 2, Embedded Finance Partners, highlights a dynamic that most traditional finance teams lack. It's what separates good teams that grow from elite teams that scale. Here's the problem. Unfortunately, most finance teams feel siloed, and this creates 2 critical issues. First, non-finance teams make financial decisions without finance's input until after the fact, turning finance into a reactive function rather than a proactive one. The second problem is your corporate financial models are likely fragile, and that's because some of your inputs are probably what Adil calls whiteboard targets. These are numbers thrown out by teams like go-to-market and sales that often don't have deep financial justification behind them. For example, when Adil was digging deep to build his first long-range plan for Rippling, this is what he noticed.
As we got into the weeds of that, you kind of realize, okay, there's a level of depth that you need from your go-to-market function. Like the sales and marketing forecast actually needs to be built out in detail for it to be an input to the overall corporate forecast. And the minute we turn to sales and marketing, we realize actually there is no model. There's an idea and there's a target, and it's on a whiteboard and we're trying to execute against it, but there's not a lot of financial rigor.
And Razzak felt a similar pain.
What I quickly identified is that we didn't really have like a business partner finance team. So we didn't have a big enough or right background finance team to sit with the head of sales, to sit in the staff meeting of the head of engineering or head of product and actually understand and be their lieutenant on their team. It was a very corporate centric FP&A motion.
So that's why both CFOs pioneered a new role to unlock finance's full strategic potential, the Embedded Finance Partner. This role is an extension of the finance team that's embedded within teams like go-to-market, sales and marketing, or even customer experience. And it serves 2 critical functions: gathering detailed financial inputs from non-finance teams to strengthen the overall corporate model, while also providing these teams with proactive financial guidance and early identification of optimization opportunities. You can implement this role by creating some sort of finance BizOps hybrid, or by simply embedding an FP&A role into another team. These embedded partners will help you build a more fully integrated model that'll allow you to make decisions more quickly, confidently, and accurately.
As we got into it, from my vantage point as kind of an early CFO where you're like doing the work, like I built those models alongside like an analyst that I hired that was sort of finance BizOps hybrid, we really started to understand the business at a much deeper level than a typical finance role, because you were in there working with the head of sales and the marketing lead CMO at the time and developing their plans kind of with them, for them, right? With a lot of input. And I think it helped shape like my understanding of the business for the next like 3+ years.
And these embedded finance partners can have a dramatic impact on cash flows as well, because they're constantly engaging with leaders in go-to-market and sales.
When one department's maybe a little inflated on their spend than they need to be. That's a much harder conversation than solving that early and saying, hey, before you throw 3 more bodies at this problem, is there a software solution that can do it? Is there another team that if they made a couple tweaks in Salesforce, I don't need to hire 3 more people on the finance back end, as opposed to, which I personally think is the worst outcome. You throw bodies at it, you realize you overspent and threw a bunch of bodies at a problem. Then you go and buy the software to solve it. And now what do you do with those people you just hired to do this problem?
Adding to this, Adil says sometimes the best way to manage cash flows is to simply generate enough revenue. Embedded partners can once again help. For example, imagine having one sitting right next to a PM and sales leadership when discussing new pricing strategies for a new product.
I think that if there was one kind of unique set of opportunities that has really helped Rippling grow, it's going really deep on the pricing dynamics of every one of the 20 plus SKUs that we sell in a way that's like far more strategic than I think sometimes companies approach the problem with.
Again, Adil's able to do this because he's embedded finance within product and sales leadership. And the added bonus is that you as a CFO will gain far more operational knowledge than the average CFO because you have so many people on your team embedded throughout the company. Moving on to phase 3, which highlights the metrics that most CFOs are not tracking but really should be, as well as the critical infrastructure and leadership principles you should implement as your company truly hits the hypergrowth stage. Based on Razzak and Adil's advice, part of becoming a hypergrowth CFO is being able to use both granular data and high-level KPIs to drive the company forward. But which granular metrics should you actually track?
You think that the CFO is only paying attention to the top line metrics and you just got to hit your goal and everything will be fine. And in reality, like the best performing finance leadership that I've worked with, that I've seen, that I try to kind of mimic, goes really down to the ground reality and tries to figure out what are the day-to-day decisions that are being made that might be affecting and impacting the overall metrics. I think the stuff that's hidden is what finance leadership ends up looking at sort of between the quarters. A lot of it does tie back to sales and marketing, which is from a productivity standpoint, are you operating at the level that you're looking for at the sales rep level, right? Are the campaigns you're running achieving the goals that you set, like forth? Then you sort of go one level up and it's like the reps, and are they hitting their numbers? And frankly, are they hitting their events? How are you doing in terms of account coverage, penetration, close one rate? I think that's critical.
That third layer is where Adil sees most CFOs spend the majority of their time. But he says you really need to go down to the ground level and figure out things like, what are those reps actually saying on those calls that's causing one team to outperform versus the other? Taking these insights and making those micro adjustments in between quarters can ultimately impact the long-term trajectory of your business. And while you need these granular insights, you also need a set of clear KPIs to rally the company behind. But here's what Razzak points out. As you scale, it becomes much harder to keep the company aligned and centralize decision-making. So Razzak advises that after you've hired all these smart, fast-paced, hardworking people, it's your job as CFO to enable them to make the best decisions quickly that are still in alignment with overall company goals. So how do you do this? You create what Razzak calls a data democracy.
So we also set up a BI team, which was to establish some data democracy, allow everyone in the company that has access to our BI tool to be able to quickly see and analyze data and then get insights and make better decisions in a decentralized manner that we could still align to overall company goals.
By the way, if you want more content from unicorn CFOs on fundraising, strategic capital allocation, onboarding new senior hires, make sure to subscribe to the Spendsetters newsletter in the description below. It's read by 20,000 CFOs and controllers every single Wednesday. That's completely free. You can even take your use of data a step further by creating data analysts that report into the CFO. Have them support functions like strategic finance, sales and marketing, customer experience, or R&D. This is actually what Adil did at Rippling, and it turned finance into a data engine within the company. All right, so at this point, we've gone from little to no foundation to a fortified accounting team, embedded finance partners that are now informing a more robust corporate model, a few key KPIs the whole company is pushing behind while still monitoring ground level metrics, and highly accessible data that keeps overall company alignment. Not too bad. That brings us to the final phase, phase 4, which explains how to build a lasting competitive advantage for both your finance team and your company. It's what most CFOs and investors will agree is one of the greatest competitive advantages you can manufacture for your company, and that is above average talent acquisition and retention. As mentioned in a previous video with two-time unicorn CFO Adam Sisicki and partner at Initialized Capital Zoe Perret, as your company scales, maintaining above average talent becomes even more challenging as naturally your employees begin to represent the broader workforce. So here's what Razzak says he looks for as the key differentiating factor when hiring new candidates.
The reason I focus so much on hiring great people is that's the only way you get scale. If you hire a really brilliant person that is good at their job but can't hire other brilliant people or retain or develop other brilliant people, you just hired an individual contributor. So when you're hiring these leaders, it's looking for those who can scale out a bunch of smart people within your org and make an impact across the whole company.
In other words, get in the habit of looking 2 to 3 years out when interviewing candidates. Can you see them in that leadership role or becoming a multiplier within the company? And Adil's advice when hiring as a CFO is to find people who can be flexible, who can build around the business, and most importantly, run towards ambiguity. Every person Adil's hired from day one has had these qualities, including his first accounting hire who went on to become the controller at OpenAI. So with this in mind, try and identify those talent multipliers who can create far more sustainable growth than any one individual contributor can deliver. And make sure to give them room to grow, not just with clear leadership pipelines, but also the right tools. And that brings us to the most important part. How do you retain this talent once you've hired them? Here are 2 powerful retention tactics from Adil and Razzak. The first is launching anonymous employee surveys.
Most of the metrics we're looking at is generally through a lot of anonymous employee survey feedback. That's normally a great way to gather information. I find the best performing employees are also going to be the last ones to tell you when they're burnt out or when they're ready to move on. They don't create drama, and sometimes it would be helpful if they told it earlier. So surveys give us some of that data.
These surveys can catch potential attrition early on, especially when you're asking questions like how much time are you spending on tedious manual tasks versus challenging and fulfilling tasks. For example, if you hire a top-tier accountant, but the majority of their time spent on tedious, repetitive manual work, this is not going to help them utilize their full potential or feel any sort of career growth.
You have to give them the tools so their day-to-day job is interesting. If you're hiring a great accountant and then you want them to be great in 10% of the time and the other 90% you're having them turn some boring crank on a monthly accounting process, it's going to be really hard to retain them. Their career is not growing from that. Their skill sets are not engaging everything that they've learned, so they're not satisfied as a professional with pride in what they do.
In other words, to keep elite talent engaged, give them the tools to automate their busy work so they can spend more time on the impactful strategic projects that they feel proud to work on. And that's a natural segue into retention tactic number 2, invest in technology to reduce manual work. Companies using tools like Rippling Spend complete their end-of-month close up to 7 times faster, improving from 28 days to just 4 days. And with this new time, they're able to launch things like technical accounting projects. And the added bonus of software automation is being able to operate on a leaner headcount.
We've done some independent studies that look at headcount growth over time. And interestingly, we looked at like Rippling customers and non-Rippling customers. And there's a trajectory, there's a clear line that you can kind of plot. And we saw that across the board, whether it was like a 220 employee company to about 1,000, the headcount was just a lot lower across HR, IT, and finance in particular, the G&A function that are core if you're using Rippling.
Adil's referencing an independent study from Benenson, which showed that companies on Rippling needed 50% fewer headcount to achieve the same outcomes. So before we get into our action on it for today, if you want to consolidate your corporate cards, bill pay, expense management, and travel into one fully automated, unified platform, then check out Rippling Spend in the description below. Okay, in the next 30 seconds, I'm going to give you 3 action items that you can do this week based on what you just learned in this video. First is simply audit your accounting capabilities. Do you have someone who's in-house, someone who's outsourced? If they're outsourced, consider bringing them in-house and see what other projects this can open up for you. Second, reevaluate the inputs in your corporate model. Chances are there are some inputs that lack financial rigor behind them given to you by non-finance teams. And if that's the case, that helps with action item number 3, which is to map out which non-finance functions could benefit from an embedded finance partner. Start finding ways to fill this role and work with other team leadership to understand how you can best serve them from a financial perspective. If you enjoyed this video, make sure to subscribe, and I'll see you in the next one.